Have you heard about assumable loans before? You might have heard it come up recently. We're going to talk about real quickly what they are, who they're good for, and then some of the pluses and minuses that are associated with them. So first and foremost, an assumable loan is a mortgage where the current mortgage holder is able to basically pass that loan off onto someone else, and that person takes over the loan for them. They assume the loan. The reason it's helpful is because say you're someone that owns a home now and you got your mortgage in 2020, 2021 where rates were ridiculously low, and now you're potentially trying to sell that home to somebody who's having to qualify for rates that might be double of what they were before or more. If you're looking at someone potentially needing a loan that the rates are 6-7% or so, that's a big difference than if you had a loan at say 2.5%. So it's an incentive for a seller to be able to pass that, say, 2.5% interest rate onto a potential buyer. And for a potential buyer, obviously that is helpful for them too, because they get a loan that's much lower than what they're able to get now. So it's good for both of them in both positions. What are the drawbacks? Drawbacks are, number one, if you have a loan, let's just say, for example, let's say the buyer is assuming your loan for $250,000. However, given the rapid rise in real estate appreciation, let's say the house you're selling is $500,000. Well, if your buyer is assuming your loan for $250,000, but they need to pay you $500,000, where's the rest of the $250,000 coming from? It has to come from somewhere. So sometimes that can be a little gap and shortfall in how to actually make the numbers work out. VA loans are able to be assumed. Neat thing about that is that they don't have to be assumed by a veteran. They can be assumed by a non-veteran. Keep in mind, however, if a non-veteran assumes that VA loan, that veteran has entitlement or eligibility that are still tied up in that loan. And I can talk more about how VA loans work, but basically that veteran loses some of their ability to finance their next house because some of that available eligibility is still tied up with the old house. So keep that in mind, number one. Number two, all loans are not assumable. Most VA loans, most FHA loans are assumable. If you have a conventional loan, most of them are not assumable. If you go to your loan paperwork from when you close, there'll actually be boxes that say whether or not your loan is able to be assumed or not. So you want to check your documents on that. One of the biggest drawbacks on loan assumability is it just takes a really long time. Whoever your mortgage holder is, the new buyer has to work with them, and they're going to call them. They still have to qualify for the loan, and then if they approve it, then that loan will get transferred to the new buyer. However, expect to wait a long time. A lot of people start the process and never finish it because it never gets done. I don't have any statistics describing how long it typically takes or how long the process is, but from anecdotal evidence and from stories I've heard and people have tried to go through the process and whatnot, it could be 4 to 6 months or so. Again, I don't have anything to back this up. I just know that assumability is something that's been talked about a lot. I don't see a lot of it actually happening. And one of the reasons that it's hard for it to actually happen is because the whole process just takes such a long time that it just kind of dies on the vine and it never ends up happening. It's hard for a seller, if you're trying to sell a home, to wait for your potential buyer to get approved for the loan assumption if it's going to take 6 months. That really kind of binds you in what you're able to do going forward. So that's one of the biggest drawbacks for loan assumability. If it is something that makes sense, again, you want to work with a servicer that you have on your loan now. You could potentially offer that as an incentive to your buyer where they can buy your home and assume this, but just do so knowing that if your loan is only this much and you're selling the house for this much, number one, your buyer has to make up that gap somehow, some way, and number two, just be prepared to wait a long time for it to happen. So that's a brief overview of loan assumability, loan assumptions, things like that. If you have questions about it, please let me know and I'll help out however I can. Okay? Well, thanks for watching. Take care. Bye.